Yesterday's 1,000-point gain was still not in the top 50 percentage moves in the history of the stock market, as Carl Quintanilla pointed out this morning. So, look, these things happen, and I think the jury's just still out as to whether this was not a bear market bounce or whether we're in a bottoming process. Certainly, we've come down enough to discount a lot of negative news next year.
Do you think we're oversold? So here are some of the stats.
Well, certainly in the short run, yeah.
In that sense, the Dow below its 200-day moving average for the 15th straight session. This was as of yesterday. The Dow was in correction territory, 15% off the highs, had the worst monthly performance since Feb. 09, the worst December since 1931. I'm sure others could point out a panoply of oversold signs, but do you think that tells us that we've stretched too far to the downside?
A little bit, but I mean, again, only in the short run. I think there's as much involvement of time as there is price in any bear market move. And I think we're in a bear market, not a correction. And so there's a lot of repair work to be done in the stock market, not just getting the fundamental catalyst right for a sustainable, tradable rally, but also just working through the time you need to repair the technical damage that's been done so far.
I mean, markets overshoot to the upside, they overshoot to the downside, Jim. So where are we on the downside in your view?
Well, everyone I talked to today, and a lot of smart people in the financial world will always tell you that those 5% rip-your-face-off rallies are actually, part of the reason we're in a bear market, because those are vicious rallies are indicative of a bear market situation. However, there's also been several different times in the last 20 years where 5% moves have marked a significant low. The fact that it's Christmas week, the fact that the volumes are very low, means I don't think you can put a ton into it. When this began and when it became evident there was a bear market, I had a very hard time thinking that we were going to get out of this without the standard 20% correction level in the S&Ps. As of Monday morning, we got it. Do I think it's over? I think there's a chance that it's over, too, but we have to see how this plays out in the next couple days. The rally was nice, but if we can't take out those highs and trade above those highs, which we couldn't today, that means nothing to me. I think the tradable thesis is when it goes above yesterday's highs in the S&Ps, feels relatively comfortable there, then maybe I'll talk about it being over.
Jim, do you believe in the Santa Claus rally, which should be this time right now between Christmas and New Year's?
Yes, I do. But every time, there's a lot of people who have money to put to work at the end of the year. They have in the past, people investing bonuses, things like that. But the end of the day is that anytime, it's like the sell in May, go away thing. When we talk about it too much, that's an indication to me that it's not going to work as it has in the past. Because at anything, when too many people get to one side of the boat, it doesn't really work out very well. So yes, I believe it. I mean, statistically, it's happened very much. Does that mean it's going to happen this time? I actually don't think it's going to. I think this is the anomaly this year.
All those seasonal things, though, that we talk about, I mean, they usually happen earlier than, and this time a Santa Claus rally didn't happen at all. So we're not even talking about it being pulled forward. We're talking about it simply not happening.
Yeah.
And in yesterday's session, what was interesting was that some of the most shorted stocks had some of the biggest gains. I mean, that tells me that
tells you a lot.
Right, exactly.
Yeah, the short covering rally. And it's funny, I can't prove it, but I was at a friend's house on Christmas Eve and I said, we are due for, as Jim just described it, a rip your face off rally where everybody who's short just gets crushed in an instant, which is what happened yesterday. And then you determine post that experience whether it was indicative of a bottom or whether it was just a short covering, blistering rally that hurts everybody exactly at the wrong time, has everybody off balance, and then you start down again. And that seems to be what we're doing. Now, listen, we can close them higher today. You never know in an environment that's this thin, and you never know what headline could come out that might move the market. We've been whipsawed by headlines over the last several days, if not weeks. So it's a tough call. I still think we're in a bear market. I still think there's a little more to go on the downside, and we need serious positive catalysts for the market to do something that would be sustainable.
To put a finer point.
Jim? Yep, go ahead.
Oh, sorry about that, Ron. I thought you were just winding up. To put a finer point on what Ron just said, too. Oh, okay, good. Every time we mark a bottom, it begins with a short covering rip-your-face-off rally. So like Ron said, the most important takeaways here, we have to see how it responds today, tomorrow, and into next week when participants come back to see if that was something that was interesting or not.